Hey, it's Mac with PriceActionTradingSystem.com, and it's Tuesday. It is September the 24th, and this will be our chart lesson for today. Sorry about the little chart there. I was trying to get it to a right size where you can pretty much see all of it in there without making it too small. What started out to look like a weak downtrend accelerated right here, and we actually flattened out and continued lower down here with a little bit flatter channel before we bounced. And I really thought maybe we might take off here. It didn't happen. We just had a little bit. We were just a little bit oversold is what this correction is. Then we came back down and we just kind of closed out. We bounced a little more. We actually found some support down here around 29.62 or 3, something like that. And we just kind of meandered sideways after that. We just couldn't get through that. So anyway, I'm going to back out. We can talk about what I saw today. There's quite a few trades, so I'm going to kind of move through this as quickly as possible without going too fast. But early on, we looked more sideways really than it looked like we were trending down. But eventually we were making lower highs and lower lows here before we accelerated downward. So you can clearly see there is a two-tiered channel working lower here. But at the same time, we were kind of going sideways here. And you can see the difference between what a downtrend looks like. Look how the EMA is pointed straight down, and prices are consistently below it for the most part. We might poke up to it or through it slightly here and there. But notice how we're just mostly below it. Every once in a while you might push through, and once you start to push through a few times, then you're probably going to at least get a correction soon thereafter. But when it's straight down like that, that's a downtrend. And look at this one going sideways, and prices are swinging up and down both above and below it till kind of in here, and then we eventually start heading lower. So that's kind of how you can tell the difference. Again, right through here, this has a lot of sideways, so you could almost argue this both ways. Actually failed to mark that one right there. I meant to at least make that one green. And I'd probably, with that being a bounce there, I'd probably take that more often than not. It's about 30 minutes in there. You could say that, there's a low. You tested it once, you tested it twice. It is a second entry long. We have bounced there 3 times, but this has got a downward bias to it. You do still have a downtrend here, and you're not down to here. So I'm not 100% crazy about that trade, but I'll leave it green anyway. So, but let's back out a little more and talk about what we do have here. 7 o'clock came right down through this little sell-off, and we had a channel here, and that's the first break. So we expect prices to try to make a new low at a very minimum here. It didn't take long to kind of figure out we were probably at least going sideways temporarily. But I like this short here. It didn't break higher, but notice you made a new low and you first entry, and then you try to go higher. And so when it broke lower, there's a second entry short there, and you got enough room to get out. It does bounce at a little double bottom here. I don't see any long setup I like. And it's moving up, and you actually get a close outside, but then you get a first entry. Then you pull back here, you get a second entry, and this actually went lower and then turned and went out. So I like maybe using a buy stop right there. It's not an ideal trade. Even if it's sideways, the highs are up here. But if there's a trend, it could have been a little lower at that time, and you could see, you might be going long without enough room to get out. And once you made this high, there's still a little bit, probably enough room to get out with a scalp, but it's questionable there. So I did make that one green. And of course we turned down here, and then once we had 3 swings, I kind of, you kind of lock this channel in here and make sure you've got your midline if you don't already have that. And not a good setup up here. That's a relatively bearish bar. You do have a break and a new high, but I'd want to wait on a lower high here, which notice how you shoot right through that EMA, pull back and test it. I draw my trend line there too as well, but look how bearish that is. I like going short because even if we're going to bounce here, you got plenty of room. And then we just talked about that one. There's 2 legs down here. You could argue this is a double test. The only problem is you haven't broke that trend line. You are a little bit away from the EMA when notice you hadn't been staying away from it very long. So there's some reasons to say, hey, I may want to go long here, but it's not ideal. And then we come back and notice we make another lower low. It's a little bit, it's only a tick or so, but it's lower than that one. So I don't think you want to try to go long again, but it does come back up here. And this was the better place to wait and go short. This one was tempting right here. Notice how you got a first entry and then it tried to go higher and it turns down, but you just don't have any room to get out there. So you can't go short there. But when it bounces, you get a better setup here. The only problem is this made a lower low. That still looks like 2 legs back, but it's not a perfect setup. So you may go short right there, but it's not an ideal setup. So of course it does drop on down and we get a little bit of an overshoot, and we start bouncing here, but I don't see anything I like. There's a trend line right here. Notice that low, first entry, second entry. So there's a failed second entry short here, but you got to go long right into that EMA. And notice what happens when it broke higher. It turns back down. It does bounce and go higher, but next time it may not. And so that's why you can't go long right there. You need a good setup. And we just never really get one. This one's right into that midline. And you don't really want to go short right there yet. So again, you wait on the lower high, which comes here, but not a good setup. And then your failure on your reversal type pattern right here. And it broke higher and turned and went out the other side. You could wait for this to finish, or you could go short one stop below that bar. But that's a failed second entry long. That's a little bit of a reversal pattern. We're not back down to this line here, and it could be that if this is a range day, we might get that measured move down that I'm always showing you. If this is truly the range is the pattern, then you may be coming all the way down to here, and so you might be interested, you're looking for a short here just in case. And especially when we just came off filled that gap there. I don't want to spend a lot of time talking about gaps, but if you're looking at a daily chart, you don't have this part in the blue. This is your overnight trading. On a daily chart, it closes here and it opens right here. And so you don't have this trading in there. So there's a gap between where it closed yesterday and where it opens today. And usually those gaps will fill themselves really quickly. And you can see prices ran down here, filled it, and looked like they were going to bounce. And that was just a trap to try to suck some people into getting long, and then they sold it off big time. So be careful of those. So you'd like to get a long here, but you just don't get it. And then you get that failed second entry long that we just talked about. Notice that eye, first entry, second entry. And if you catch this one, you can pretty much ride this all the way down and get you a big time runner. But notice what happens down here. We push on down. We try to go short once. There's actually a second entry short right there. It's tempting, but I would probably wait because there's not a lot of room to get out. But when it tries to go higher a third time and you get a triple test of that trend channel line right there, I think it's worth going short. Here's a little breakout pullback short on the lower high as well. I'm not as crazy about it. It actually broke higher first and then turned and went down. You might go short there. It's a little aggressive because you're going short at the low of the day now, with just one. I mean, if you enter below that bar, then you're going short at the very low of the day. And even if you had gone short below that bar at the time, that was the low of the day. So turns out to be a great trade, but you don't know that. You're better off to enter here or already be working a runner from here. And this thing just takes on off. We try to climb a few times here, but you don't want to go short into that. And of course we bounce. First entry, and there's actually a second entry short there. Not a very good setup. Not a good signal bar. And then it runs up. I like this one. Let me explain this one. You got this trend working up. That's your first break, and it does push to a new high. Normally I'd say I want to wait on a lower high here, but that's 2 legs back. If you can see that, there's one leg and there's a little 2-legged correction and then another leg. And generally that little two-legged correction is the center of the pattern. So if you measure that and then you look for that, you get a perfect measured move. So that's probably the center of your pattern, and there's a measured move. We're probably going to at least go down and try to make a similar leg to one of these other ones. And you can see, once again, the bottom falls out. There's a lower high here, but it's right into those lows. You can't take that one. And then we actually move down here, and you come back first entry, and then you come back to that trend line, that key entry point, and again, you get another second entry short with a nice bearish bar. Lower high here, you still got plenty of room. I like that one as well. You could look at this like a failed second entry long, but now you're going short right into those lows. Just kind of wait, and then you just kind of go sideways. There is a little bit of a breakout pullback, but it's still right into that low that we hadn't been able to breach yet, so I don't think you want to take any of those. Another lower high on a failed second entry long, but right into the lows. You're away from the EMA. And you can see it wasn't long before it bounced. But once again, you got two legs back. This is almost a repeat pattern of this one right here. You actually have a second entry short right there, but that trend line's working up, and you're really kind of going sideways. It's more like a failed breakout, and you don't have much room. But when it runs back up here, and you can see there's a leg up, and then a little two-legged correction, then another leg up. And so on a bigger picture, that's your second entry, just like we had right here. And fairly bearish bar, and you got plenty of room to get out now. And you can see it takes on off. So I like that one. And then it kind of does that again right here. You're kind of making these little double legs up. And notice that you got a first entry right there, and then another second entry. Generally, I would say you don't want to take this one, but we also confirmed that. Notice that trend line off those first two swings. It confirmed it there. That's another reason I like that one. But this is two legs back. This really looks like one leg, even though there's a little break lower. But technically, on a smaller level, there's a second entry short. Actually, on this level, there's a second entry short, although it looks like one leg up. But it's at that key entry point at the EMA. It's been a big downtrend. Relatively small bar, very bearish. I say it's worth risking, but you can see it would have worked, but it still plays out, and you get two legs back, and that's your better entry. But if you're looking at this at the hard right side of the chart, and this downtrend has been so bearish, you know, if you didn't take it, the reason would be that trend line working up. But otherwise, it is a second entry. It is off that brown key entry point. You can see it working down through there. It's just hard to say no to that trade. You just about need to take it. So, but that's really the better entry right here. And now you can see two clear legs up, and off it goes again. And you can't go short right into that. You might have been thinking, hey, failed break lower here. But this has been such a strong downtrend. I mean, look at that downtrend. You don't want to be trying to pick any bottoms on a day like this. I did mark this one green just simply because it's a failed second entry short. Notice that low. First entry, it does push through the EMA. Second entry, you could treat it like a failed break lower here. It does confirm that trend line working up. Nice bullish bar, but I think it's risky. It would have worked, but notice it's not long before we're headed lower again. There is a lower high right here, but that's basically just an up-down bar, and they're not very reliable. You could argue for this one because we did push through the EMA and pull back, and this is looking like a sideways channel here. Notice how we've got consistent resistance up here, and we've been bouncing here. So you may take that one. I didn't mark it. I'm willing to give it a green one. The middle of the range, when you're in a range, is where you have more failures, and that's kind of right in the middle. But there's some reasons to like that one. And of course we bounce. And again, it's tempting, very tempting to go long down here, that far away from the EMA, making a double bottom, especially when we're kind of coming out of we've been going sideways for a while. But I just can't justify taking any longs after that downtrend right there. I mean, that is a serious downtrend, and you'll get burned trying to pick bottoms. You want a confirmed reversal. So anyway, it would have been a nice trade. You do get a failed second entry short right there, but that's a lot of sideways stuff. We're not back to the EMA. Again, it would have worked, but not a very good setup. And then you actually make two legs back, and you got to say, hey, we got a possible trend line here, but you don't get a very good signal bar. Then it makes a high or low here and a nice bullish signal bar, and you got enough room to kind of get out there. So you may take that one. The fact that it didn't take off real quick and just still bouncing around, I wouldn't take any more of these, even though you could say that's a failed second entry short. The fact it didn't take off, that's not a good sign. If you can get out of this trade, don't risk another one there. And you would have gotten out of that one with a clean scalp, but you had to kind of ride out some of this mess. So, and then it looks like another reversal. You could say that's a failed second entry long right there. Notice that eye, first entry, second entry. But we've been working up. I would wait here. And notice before we did get this break, we do have a break and a new high. But notice before we got that break, there was a big overshoot here. And so that tells you you'll probably get a break soon thereafter. And then you're looking for that attempt to a new high. So you've got everything you need to say, hey, we may reverse here. This was a big spike and channel up. So I want to see something concrete before I go short. But notice how you push through. You made this high. You come back once. You come back twice. And you got a fairly bearish bar there with equal highs, so you could go short there. I wouldn't wait for this big bar and go short in that double bottom. That's just too risky. But you could go short right there if you wanted, just calling that a double test. And we're making lower highs and lower lows for the most part there. We do make a little higher high here, but it's a little failed break higher. So in here we're making lower lows, and that's generally a sign that you're probably going to push on down. It's a clue anyway, which we do. You could look at that as a failed second entry long, but again, I don't think that's worth risking. You could argue for that one to be green. It's a good signal bar, the whole 9 yards, but you want a little more correction than that. You'd like to see it come back to the key entry point, or at least the EMA, like it does right here. And notice you come back and you get a first entry. You try to go higher. Notice how that key entry point's still holding. And look at that big bearish bar on second entry. It tried to bounce again after it broke lower. So it would have been a little nerve-wracking, but it drops on down and then tries to bounce again. That took us into the 2 o'clock hour, though. There's actually a failed second entry long here, but the fact that we didn't drop on down right there and this starts working sideways, you got a lot of congestion and stuff. I'd probably wait that late in the day. Again, it is a failed second entry long, and there's a you could argue for that to be a new swing low. There's a little 2-bar matching low, and that's a tick lower. So you could say, hey, that's a first, second entry and a failed second entry long too. So, you know, you might give that a green one, but being that close to 2 o'clock, I'll just tell you I wouldn't take that trade. And that's what we had for today. So it was a really interesting day. Again, look at that big sell-off. Once you start going down this hard, don't be looking to try to pick any bottoms. I mean, like I said, this is questionable at best here. But we've had a break and a new low, and then we had a flatter one with a break and a new low. And this does look like a reversal pattern. So, you know, if you, a lot of times you'll get this kind of move out of there right here, and that's what you were kind of hoping for. But when that didn't happen, you didn't want to try to do it again. Of course, you made a double bottom here, and you're a little bit away from the EMA here. But with that trend line working down and no break of it, it's just not worth risking. So, pretty good trading day. Anyway, I hope everybody had a good trading day. This probably this throws you off because it's not what you would. This is not what you would expect today. But that's the way trading is. There's nothing 100% in trading. And, you know, I have that conversation a lot with people about, you know, our trading rules and so forth. And that's why there's some interpretation in there. But for the most part, you have to follow the rules. But nothing is 100% in trading. If it was, we could just write algorithms and, you know, computer programs to do all our trading for us. But you can't, because nothing is 100%, and you need to be able to use your eyes and your trading experience to weed through some of this stuff. Where you couldn't do that. You can't write a program to do that. And I know there's probably some traders that say, yeah, I can, or some programmers, but I hadn't seen anybody do it that can out trade humans yet. And when I do, I'll say differently, but I haven't seen it yet. Nobody's proved it to me. So when somebody does, you know, we've been working on an algorithm of our own for years now, and it'll make money. It will, but it don't. But you know, you have some big drawdowns, and then, you know, long term it makes money. But it can't out trade. It can't out trade me. And until it can, why would I want to waste my time with it when I can have more success just trading on my own and not dealing with it? So maybe one day we'll get it a little better. But you know, it does make money long term, but you have some drawdowns and stuff, and I just don't like that. I don't, you know, it makes me nervous. So one day it may not come back. It may take a drawdown and not come back, and I don't want to risk that. So I'll never release that to the public until it can out trade me. I'll just leave it at that. But anyway, I'm going to wrap it up for today. I need to get out of here. I got some other things I got to attend to today. But I hope you had a good trading day. We'll be back again to do it tomorrow. I'm done for today. This is Mac. Actually, before I say that, I did want to say one other thing. There was something that somebody asked me a question on, and I wanted to talk about. Oh, I think I already did. I think that somebody had asked me about the green lines and the brown lines, and I did talk about that. So that's just your close from yesterday and your open today, and that shows you the gap. This between the yellow and the brown will be the gap for the daily chart that prices will usually try to fill that same day, if not soon thereafter. So anyway, I am going to go ahead and wrap it up. We'll see you tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.